But moving on to an exclusive now, sources are telling us that planned amendments to the Insurance Act may be taken up in the monsoon session of the Parliament. Yash is here to tell us more. Yash, what are you picking up on this?
Well, that's correct, Pavitra. So, of course, these set of amendments to the Insurance Act have been most significant ones, the biggest ones so far in many decades, structurally changing the insurance sector going forward. What we've been given to understand is that all these Finance Ministry proposed amendments to the Insurance Act are likely to be taken up in the monsoon session of the Parliament itself. There was a lot of anticipation that they would have been taken in the winter session. That did not go through. But we have this confirmation from sources privy to the development that these amendments could be taken in the monsoon session as well. Now, as far as these amendments are concerned, out of the many amendments proposed, there are 5 most important ones. The first one is a captive insurance license through which life insurance companies can enter general insurance, health insurance, and vice versa. The second one is with respect to distribution of other financial products like mutual funds, fixed deposits, bank loans. Third one is lowering the minimum capital required to start insurance business. Fourth one being captive insurance companies where conglomerates can start their own insurance entities for their parent company and employees. And the fifth one is with respect to investment regulations. What we've been given to understand from our sources is there is a consensus on the first 3 amendments, which is with respect to captive insurance, composite insurance license, and lowering of minimum initial capital. So these amendments are expected to go through in the form that they were proposed. But importantly, there are certain tweaks which have been made around 2 crucial amendments. The first one is with respect to investment regulations. Now, as per the current regulations, the Insurance Act says that insurance companies have to invest a minimum of 50% in government securities and 15% in equities. Now, the power to set these investment limits as per the amendments will shift to the regulator, but there's a little tweak which is expected to come in the final draft that gets proposed to the Parliament, where it will be said that any changes made to the investment limits will be made in consultation between the insurance regulator, that is IRDAI, and government. Also, one another important thing is that it won't be for a single company or 2 companies. If the investment limits are changed, it will be for the entire industry, the entire insurance sector. Companies can choose if they want to increase or remain within the limit as far as equity investments are concerned. For example, the second change which is expected is around captive insurance. Now, for captive insurance, though the power to give licenses for captive insurance will be with the regulator, but as far as the solvency margins are concerned, that decision entity to entity will be taken in consultation between the insurance regulator, IRDAI, and the government. So these are the 2 important changes which are expected to appear when these amendments get proposed before the Parliament in the monsoon session. Other than that, the 3 other amendments are expected to go through as they were proposed in the draft paper.
All right. Thanks so much, Yash, for getting us all those details on the proposed amendments and the changes coming up in the insurance space.